Welcome back to the Dividend Diplomat's YouTube channel. You've got your boy, Bert, the Hurt Locker, and you got Lanny, the Dividend Diplomats, and we're here to talk to you about another dividend growth stock. It's time to possibly buy this stock now.
But before you go buy that stock, there's something you got to do first, Lanny. Smash that subscribe button, everybody. Give us a thumbs up on this video. Let's go, everybody. We're amped up. We are excited to talk to you about this company that is an undervalued dividend stock because, man, oh, man, do we want to keep buying undervalued dividend growth stocks. Isn't that right, Lanny?
That's the only way to live is buying undervalued dividend growth stock. You don't wake up to eat. You don't even need water anymore. You just need to buy dividend growth stock. Save your money. Don't spend it on utilities. Just invest that.
Don't spend it on utilities, though. You don't spend it on anything. How are you going to buy that stock, Laney? If you don't have the internet, you don't have anything. Just drive on down to Wall Street with some trade tickets, throw up there and say, I'm buying X number of shares of this company we're about to talk to you about today.
I'm just going to mail you a letter, Bert.
That's the old-fashioned way. Trade confirmations come 3 weeks later. It'll be perfect.
Tell you what, if you can get a stock certificate, that'd be pretty cool.
It would be pretty cool to get one.
But we are here to talk to you guys here. We're recording this video on August 17th, pretty late at night. We're doing some research and we heard it in the comments about this other stock. In fact, I've owned this dividend stock for probably 11 to 12 years now.
Yeah, I was going to say, don't get a little arrogant or ahead of yourself with their commenter because Lanny has known about this company for a long time. This is one of the OGs of Lanny's portfolio.
This is an OG of the portfolio, and this is not a Dividend Aristocrat, which Dividend Aristocrat has increased their dividend for 25 years. But this company is so close. They're only 5 to 6 years away. But this is one of the first dividend stocks I've bought, probably one of the first five to six stocks I bought back when I was in my younger 20s, during that financial crisis time period.
And it was a great one to kick your portfolio off with, Lanny, and you're hopefully going to tell you a little bit why. And you'll see why this is a company that just transcends time. They're going to be growing their revenues, their earnings like crazy because of the sector they operate in. So if you're going to kick your portfolio off, this one really isn't a bad one. And it was on the fringe of being on our top 5 foundation stocks list. It was close. We had to pick 5, so we had to cut a few out. But you could make an argument that this would be one of your top 5 to top 10 stocks to own.
Once they make that aristocrat status, they'll make a very good argument. The industry that this stock resides in is the defensive industry. And the other players of Northrop Grumman, you've got General Dynamics. And yes, we are talking about Lockheed Martin, baby. Ticker symbol LMT. And Bert, why is this stock hot on the radar right now?
Well, their earnings and their revenue growth, they continue to shine. On average, over the last 3 year, revenue has increased nearly double digits at 9.4%. Fantastic stuff. But what's great is even though their revenue is just below 10% growth, they still managed to grow the bottom line EPS by an even larger percentage. It's double digits earnings growth on average over that same time period. So they're growing the top line, they're growing the bottom line, and they just operate in a sector where the government spends billions and billions and hundreds of billions to support this industry that Lockheed just dominates.
Bert is excited, but the big reason why this is on the radar and everybody has Lockheed Martin stock on the dividend investor radar is because they were recently traded at the $400 mark, give or take a few dollars in the last 52 weeks. But the stock is actually down about $40 since that 52-week high. And they're currently trading at $361.60. That sounds like, oh, they're down $40 per share. That's a ton. I mean, really, that's about a 10% little price correction there.
But that is a ton when you consider that the S&P 500 continues to hit record highs. So you finally have a stock that everybody is watching and has strong fundamentals from their earnings.
watching to see what you can do.
Yep, you see that market's going up, Lockheed's going in the other direction. So naturally, of course, you're going to take the time to look and see if it is that undervalued dividend stock to buy.
So Lockheed Martin, currently is trading at $361. We're going to run them through the Dividend Diplomat Stock Screener, which is going to focus on 3 dividend metrics: the price to earnings ratio for number 1. Number 2 is the dividend payout ratio less than 60%. The perfect dividend payout ratio is 40 to 60. And then third dividend metric is that dividend growth rate history and the growth rate on average. Lastly, we'll take a quick look at the dividend yield to see if it complements that dividend growth rate. If it's a lower yielding stock, you want a higher growth rate. If it's a higher yielding stock, you should expect a lower growth rate.
Let's see. Is it time to see how Lockheed's going to do here, Laney?
Well, before we jump into the metrics, Bert, I'd like to go over just a few quick high-level actual performance measures. I think the community's benefited from that. First, from like a financial performance standpoint, on average, that revenue has been growing almost at double digits every year, about 9.4% on average over the last 4 years from a 2018 to 2020 standpoint.
Yeah, and with it, again, we've seen some strong earnings growth with it too, which again, as we said earlier, we love to see top and bottom line growth here for Lockheed. And what's cool though, they continue to announce some nice dividend news, Lanny. Do we want to go into their last dividend increase now, or do we want to save that for when we're going through the third metric? What do you think?
So what was their recent increase towards the end of 2020 during a pandemic year?
To your point, a pandemic year, it was an 8.33% increase in their dividend. So a nice high single-digit dividend growth rate, well above inflation. And that's really going to be key, especially as we start looking at their yield, looking at their payout ratio, and we'll see how it stacks up against their recent 5-year dividend growth rate as we start going through the stock screener here in a little bit.
And guys, how does Lockheed continue to do it? How do they continue to grow top line revenue and bottom line earnings? Since bottom line earnings has grown actually at a double-digit rate over the last few years, even outpacing the top line growth. And it's pretty simple. A good example is what they just announced in June. They actually just won a $4.9 billion contract to help build advanced missile warning satellites, for example.
Again, they dominate the government sector. The government budget keeps growing. As we see every year, they pass larger budgets. Defense spending continues to increase. So they are just dominating. There are billion-dollar contracts that are being handed out like candy, and companies like Lockheed just continue to benefit by dominating the sector and being one of the largest player in a high barrier to enter.
You grab candy though, you got to make sure that the wrapper is still in tight. It's not tampered with. Kind of what you're gonna do for your kids. You got to just check out every piece of candy.
I guess you do, Lanny. That's some good Halloween advice right there from Lanny.
Oh, guys, and now let's get to the point though. Buying dividend stocks, we do this again because right now your cash is either sitting on the sidelines. And Bert, how much is a normal online cash savings account earning?
On the high end, it could probably be about 0.5% to 0.55%, maybe a little more if you use other avenues. But most are usually falling in the 0.3 to 0.5% range. And then even if you're just using your large institution that you have locally, you're probably earning nothing on it. So you have to search to earn 0.3 to 0.6%. It's a hard find.
Yeah, so that's, part of why we do dividend investing, because you're moving your money into probably, obviously a higher risk asset, but not as, risky as other investments, such as your cryptos and your more volatile tech non-dividend paying stocks. This way you actually earn a yield. Your money typically grows on average steadily, and these companies are usually less volatile than the overall market. And one can argue that the majority of returns in the S&P 500 are built on dividends. But now, Bert, I think the community wants to know, what does Lockheed Martin look like through the 3 dividend stock metrics as of August 17th. So Bert, do you want to lead us off here with that price to earnings ratio?
Price to earnings ratio, their last trading price, 361.60. Divide that by forward EPS of 22.77. P ratio of 15.88. Below the S&P 500's historical P ratio, it's around 35-ish, and their forward earnings PE, and their forward PE ratio based on forward estimated earnings, that's usually in the low to mid 20s. So Lockheed is trading at a discount to both of those metrics. Lanny, what about the payout ratio here?
Well, first, that's phenomenal. And they're actually trading at a lower PE ratio than General Dynamics, which is trading at about 17 times forward earnings. So Lockheed is, attractively valued compared to the competitor. So Bert, you asked for payout ratio. You're getting the payout ratio, brother. So you look at the annual dividend, which is currently $10.40. Obviously, divide that by 4 over the quarters of the year. Take that over the expected earnings of $22.77, and you get a freaking perfect ratio, baby, at 45.67%. Woo, woo, woo. You know it.
We'll see. The company has plenty they do a great job of reinvesting in earnings to continue driving that earnings growth that you see, and that is so critical for them to maintain their position as a leader in the sector. But they also reward shareholders in a very nice manner as well, and it'll allow them to continue the strong dividend increases, which we're about to discuss here as we roll into that third metric, the dividend growth history. Their 5-year average dividend growth rate is 9.6%. And as you said earlier, Lanny, they've increased that dividend for 19 consecutive years. So they're on the doorstep of becoming an aristocrat.
Ooh-wee, Bert. Ooh-wee. Yeah, so they're at 19 years with a solid 9.6 growth rate. How many here have gotten a raise in the past 24 months at an average of 9.6%? I don't know if you'll have that many people comment that they have. So your dividend is growing at 2 to 3 times the pace of inflation, and actually 5 times the pace of inflation in ordinary times, because long-term inflation is almost about 2%. So you're looking at a very high dividend growth rate on average. And based on that payout ratio, they still have the ability to grow that dividend, Bert.
Yes, they do. Yes, they do. So let's look here at that bonus metric, the dividend yield, 2.88%. So over 5 times that savings rate that we're talking about on the high end of that spectrum. What's cool here, though, 2.88% yield with a 9.60% average dividend growth rate. There it is, Lanny, your favorite dividend factor, where you add the dividend yield and the dividend growth rate. We like to see it over 10%. This one, well over 10%. Fantastic to see here for Lockheed Martin.
Yeah, I mean, you're really dealing with a 12+% dividend compound factor here, over 2 times what the S&P 500 is currently yielding. Lockheed Martin, you're going to see the gift. Jim Cramer, I love this stock. I love Lockheed Martin. Go ahead.
Let's just run through the metrics here to see why you love Lockheed Martin. To summarize, P ratio 15.88, payout ratio 45.67%, 9.6% 5-year DGR, 19 years of increasing that dividend with a dividend yield of 2.88%. Are you going to be buying, Lanny? That's the question.
This is going to be big on my watch list. It's obviously hard for me to buy because I'll be open with everybody. I bought Lockheed over 10 plus years ago at around $66 to $67 per share. So they've had a little bit of a run up in share price, plus all the reinvestments I've had in the dividend. It's really compounded over the last decade, but you can't argue the metrics. They are freaking great metrics, Bert. What about you?
And they're going to be moving up on my watch list too, but that's why we look at the metrics, everybody, because to Andy's point, if he just looked at appreciation from 10 years ago to today, you'd look at it and be like, I would never buy this stock. It's gone up so much in price. But look what also has happened. Their earnings have grown. So their price and earnings are growing. So their PE ratio is still trading at a discount compared to the market. It's always important to continue focusing on those fundamentals. And Lockheed Martin is a great example why.
That's probably what I really need to do is I need to go back to the EPS around 2009, 2010, and, really see it. And actually, I think they were trading at less than 10 times earnings back in my day. So still pretty attractive, though, at just under 16 times earnings.
Slightly different economic cycle then too. When you're buying them right in the financial crisis, you would understand why.
Bert, do you hear that? Chanting to you, pull that trigger, pull that trigger.
We shall see. Everyone, let us know. Are you going to be buying Lockheed Martin? Are you going to be watching? What is your thoughts on this great defense sector company? Let us know in the comment section.
Share in the comments below. Are you a Lockheed or are you a GD guy? Or are you both? Or are you neither? We want to hear it. We want to see what your thoughts are on Lockheed Martin. Solid dividend stock, passes all the dividend stock metrics. This looks like a very good stock to buy right now or add to your watch list. Obviously, make your own decision, do your own homework. Bert, any other parting words for the dividend investing community?
Everyone, again, if you haven't subscribed to our channel, like this video, give us a thumbs up. Thank you for all the support. We appreciate it, everybody. Send us off, Lanny.
All right, you got it. I just want to say thank you for the millions and millions of dividend investors out there. That was Bert the Hurt, and this is Lanny from the Dividend Diplomats. Over and out.